Hey everyone, welcome back to your weekly market outlook. This is for the final week of May and the start of June. So 29th of May to the 2nd of June 2023. My name is JDR. Let's get this started. Alright, so let's do a quick recap on last week. We don't actually have a lot going on at the beginning of last week. We've got the manufacturing numbers coming out from the Eurozone, the UK, as well as the US. The Eurozone number and the UK number, it's pretty okay. It wasn't that much of a surprise. It was the US number that was really more of a little bit of a surprise there. It's another drop below 50. We've got manufacturing PMI coming in at 48.5. This is for the flash manufacturing PMI. Services PMI pull it up 55.1. So the composite is actually still up overall. But that's pretty much it coming out from early on the week. And then we've got the RBNZ hiking another interest rate. Hiking another 25 basis points onto the interest rate. It is now at 5.5%. We've got the UK CPI numbers. This is something to talk about because we've got the UK CPI numbers that fell below 10% finally. It is still slightly higher than the consensus at 8.7%, but overall it is well below that 10% mark. However, to note here, the one thing that doesn't really help out with the sterling is that the core CPI did go up with it as well. So the underlying inflation actually remains high. In fact, it's actually still increasing. It's just that the headline inflation, this is really more on the energy prices coming off that we see the headline inflation coming below 10% for the UK there. We've got the FOMC meeting minutes, new details coming up from the FOMC meeting minutes. If we read through the lines, it is actually a little bit more hawkish than what the market was anticipating. In the potential for a rate hike pause in June. Before the FOMC meeting minutes, it was 90% on the consensus that there's going to be a pause in June. But after the FOMC meeting minutes was released, this one here, the consensus is now about 60 to 70% for a potential pause. The wording here that needs to be considered is actually in terms of the economic projections, in terms of their interest rate target projections. It was at 5.25%. That was the cap from the previous economic projections. In June, they're going to be releasing a new economic projections, and with that, there's going to be a potential concern. And this is something that's already been mentioned in the minutes, that they might actually be looking at a potential 50 basis points in terms of an increase to their interest rate target projection. So that leaves about 2 rate hikes in 2023, no room for rate cuts in 2023. So in terms of whether or not they're actually going to be pausing in June, they could pause in June, but they could hike again maybe in July or in August if their interest rate projections went up with it as well. In terms of the inflation, it's still way above their 2% target, so they would still consider it to be really high. So we've got a hawkish FOMC meeting minutes, all right, and kind of needs to go into the details to get the meeting minutes out there. But we posted out a note on the FOMC meeting minutes, a little bit of a summary there, and a little bit of the what makes it hawkish as well. So that's already out last week. Then we've got the preliminary GDP, the quality GDP. This is not really that important because we're not really part of the quarter numbers. It would be next month. It's just not for this one here. But nevertheless, it shows the US economy is still growing. 1.1% was the expected consensus. We saw 1.3%, and then we have the core PCE numbers. We've got the personal consumption expenditure numbers for the US there. It's up from 0.3% to 0.4%. The big number is actually on the spending. The spending actually went up. It kind of doubled the consensus. Consensus was for spending to go up to 0.4%. It went up to 0.8%. So we actually saw a little bit more spending there. So this is, kind of gives the market a little bit of an afterthought, with the FOMC meeting minutes, that hey, you know what, people are actually spending more, inflation could still go back up again. So that was the consideration for last week in terms of the fundamentals. All right, this week, just to start the week, it's going to be a holiday. All right, the US is going to be observing Memorial Day. I believe everyone else in the Eurozone, it's going to be Whit Monday. But just to start off, I think we have a little bit of an agreement on the US debt ceiling talks. No details as of yet, and it still needs to bypass, get approved by the lawmakers there. But in terms of McCarthy and Biden, I think they have come to some sort of an agreement, which is kind of encouraging the market a little bit. At least it kind of alleviates some of the concern there. But again, the cutoff date would be June 5th. That's when the US government will run out of money. That's going to be June 5th. All right, so let's talk about this week. We've got the Australian CPI numbers again here, previously at 6.3%, expected to go up to 6.4% for Australia. And then we have the Canadian GDP numbers, but not really going to be the focus. The focus is going to be the job opening numbers again. 9.59 million, expected to drop down to 9.41 million. We've got the NFP numbers this week. So we've got ADP on Thursday. We've got the weekly unemployment claims on Thursday. We've got the ISM manufacturing PMI numbers as well. So last week we've got the flash manufacturing numbers. Now we've got the official ISM manufacturing numbers. ISM manufacturing PMI from 47.1% expected to drop down to 47. ISM manufacturing prices expected to go down again as well, with that 53.2 to 52.5. And then obviously we've got the NFP numbers, which is kind of the event for the week, I guess. NFP numbers projected to be down below 200,000 again. So if that's going to be the case, that would not be the first. The first was actually in March, so I don't think we are in for a little bit of a surprise here. But I'm not going to be too surprised if we see a number that's actually above 200,000. In terms of the unemployment rate, we've got another projection now, 3.4% to 3.5%. I think what we could be looking, or we could be anticipating, is that the unemployment would remain unchanged at 3.4%. But again, we might get that telltale signs from the JOLTS job opening numbers as well as the weekly unemployment claims. Now, if we tally up the unemployment claims, it does point out to a potential higher than consensus number for the NFP numbers as well as the unemployment numbers in the US. All right, let's move on to technicals. Now we'll take a look at the dollar index here. This one here has surpassed 61.8%. This one here, if we take a look at this and compare it to the Euro USD, is actually kind of, it's basically just a mirror image of one another. Anyway, it is above 104, it is above 61.8%, but it's still below 78.6%. In terms of how, what's the cap here, I think we're looking at right around the time where we could actually see a little bit of a technical correction happening for the dollar index. If price on the index moved back below 104, that would initiate a little bit of a pullback, a little bit of a technical correction, because if we take a look at the momentum here, it's kind of burning itself up right now. All right, it could grind higher, it could go above 105, but if we see that move above 105 and we don't see that correction, there's a high chance of a sudden quick reversal in the market. Now obviously that's not going to be the scenario that us traders want to see. We want to see that gradual correction happening right now for the dollar index. But right now, overall, it has transitioned back above the Ishimoku cloud. So overall, long term for the dollar index looks pretty good to the upside. But I think we need that technical correction. I think we need a little bit of that pullback there. Potentially towards 103.50, 103. That's kind of the limit in terms of how far it should go. Anything lower than that, it would jeopardize the the current underlying uptrend for the US dollar itself. So dollar index here, starting the week, finding a little bit of resistance at 104.50. We're going to be looking at 104.50 to 105 in terms of resistance. In terms of whether or not that's going to be a technical correction, we would want to see a daily close below 104. That would likely trigger that short-term technical correction on the dollar index. All right, moving on, we've got the Aussie USD. Aussie USD finally reached 65 cents, like finally, right? That's 127.2%. It is currently at finding support at 65 cents. We don't know if this is actually going to hold, but it looks like it might hold. If it doesn't hold, then we have more support to the downside, 64.50, 64.25. That would be the limit in terms of how far it would go. I doubt it will actually go to 64, but we'll see, depending on how strong the US dollar is going to be. But for now, again, we're really more anticipating a little bit more of a potential bounce of 65 cents support. I think 65 cents is a solid support. We might actually see that technical correction happening for the Aussie USD. If the the dollar index does its correction, I think we might actually look at that correction happening with the Aussie USD as well. We might see this one pull back up a little bit, potentially towards 66 cents, but anything higher than 66 cents, that would kind of jeopardize everything. In terms of how far up it can go, technically it could go all the way back up to 67 cents and remain below the Ishimoku cloud, maintaining the current downtrend on the Aussie USD. Next up is the Euro USD. Just like the Aussie USD, we've got 65 cents. On the Euro USD, we've got 1.07 to worry about. In terms of the positioning, it is below the Ishimoku cloud. Momentum wise, we're not really considering this oversold as of yet. If you take a look at the stochastics, it is really low. It is at 5 in terms of the fast, and the slow is at about 7. Very, very low in terms of the stochastics. What does that mean? That doesn't actually mean this is an oversold market. It means that if price is able to break below 1.07, then we could actually see a sudden spurt to the downside. We might see a price quickly go towards 1.0650, potentially towards 1.06 and even 1.05. If that's the case, if we lose that 1.07 support. However, if we see that bounce off 1.07, then we anticipate a little bit of a technical correction. How far up should it go? I think we should be looking at 1.08 and 1.0850 as a potential resistance for the Euro USD should there be a bounce of 1.07. So I think early this week, this is going to be critical to see if price is able to hold on to that 1.07. But again, considering this is an NFP week, there might be that surprise at the end of the week, that could really drive prices in a more volatile way. But in terms of considering this to be an oversold, this is not an oversold. And judging by the stochastics here, when we look at stochastics maintaining a low level below 20, we really think more towards the potential risk of a current underlying trend speeding up in terms of momentum because it remains below that 20 level. So I think 1.07 is going to be the key level to watch out for on the Euro USD. For the pound USD, very similar situation as well. We've got 1.23 holding the market right now, 1.23, 1.2350. This is holding the market really well right now. There's no transition below the Ishimoku cloud, unlike the Euro USD. For the pound USD, this one here has just went back inside the Ishimoku cloud, testing it for support. So I think if price is able to push up a little bit higher, maybe 1.24, 1.2450, if there's a daily close outside of the Ishimoku cloud, we might actually see a little bit of a transition happening on the stochastics as well. It might confirm it as an oversold condition. It's not oversold as of yet, so we need further confirmations, but it is looking like the Aussie USD, the Euro USD, and the Pound USD has some sort of floor holding it right now. So whether or not this floor are actually going to hold this week, I think that's what we need to focus on for this week. So the key levels that we mentioned, 65 cents on the Aussie USD, 1.07 on the Euro USD, 1.23 on the Pound USD. These are the key levels. And for the Pound USD, this is the level that we have been anticipating for weeks for the market to pull back towards 1.23, and we saw that happen right now, very close to 1.23. We might actually consider the test to be done pretty much at 1.23 at this point in time. So again, we need further confirmations. Ideally, we want to see price move above the weekly pivot. We want to see on the daily chart price move back up above the Ishimoku cloud before we could say, all right, this is a technical correction. We might see another retest of that 26th of May high 26th of May 2022 high at about 1.2666. So this is going to be the case scenario for Pound USD. All right, finally we've got the dollar Japanese yen. To just give you guys a warning, I think we put out a note on the dollar Japanese yen as well. So tread carefully with the dollar Japanese yen. This one here has transitioned above 140, opening up the week pretty much above the weekly pivot. So we might actually see two potential scenarios at the start of this week, right? Either price gyrates towards resistance 1, which is at about 141.75, which is also a key psychological level. It's kind of the barrier towards 142, right? So either we saw price gyrate towards 141.75, or we see a little bit of that correction happening early this week, coming back towards 140 for the Dow Japanese Yen. But overall, for this one here, this is, currently pretty much in an uptrend. It just requires a little bit of a technical correction. Price could continue to push towards 143 for sure. Yes, that's 161.8% in terms of Fibonacci extension if we take a look at the drop in the month of March. But again, really depends on at the start of the week whether price gyrates above 141, closer towards 142, or is it going to pull back to 140. If price pulls back to 140, I think what we're looking at is that there's likely going to be a lot more buyers coming in at around the weekly pivot. So it's actually good for the Dow Japanese Yen if we start the Monday or Tuesday where it's a little bit quieter, price pulls back to the pivot points. I think that's where we are actually going to be looking at buyers coming in for the Dow Japanese Yen. Again, with the comparison to the dollar index, the Euro USD, the Pound USD, the Dollar Yen, we always need to treat this as something separate in terms of correlation. It actually doesn't have a lot of correlations to the Euro USD or the on the dollar index itself. It does have a positive correlation to the dollar index, but in terms of whether or not it represents dollar strength, the Dollar Japanese Yen is likely a little bit unique because it's kind of interconnected with the Euro Yen and the Sterling Yen as well in terms of the Yen strength itself. So for the Dow Japanese Yen, the Euro USD might bounce up, the Pound USD might bounce up, the Dollar Yen might actually pull back down a little bit. If there's support at 140, buyers coming in at 140, that could still lift the Dow Japanese Yen to the upside. So this one here, opening the week pretty much in between pivot and resistance 1, so we are a little bit unclear in terms of what to do with the Dow Japanese Yen, but the overall underlying trend remains to the upside. I think I would like to see the scenario where price pulls back towards 140, 139, back towards the Tenkan Sen at the very least, see a little bit of a technical correction happening before it could have enough momentum to grind higher, to push higher towards the projected 143 at 161.8%. All right, so that's pretty much it for this week. Good luck for your trades, and I'll see you soon.